Hey everybody, today we're going to hit on the topic that I think is key in many of your minds. That is how to buy a house in 2023. There is no doubt that 2023 is going to be a tighter year when it comes to how you get loans, what is available, and what the housing market scenario is. But the fundamentals are no different in 2023 than they have been before. We'll talk about all those details through this video. So what will we cover? Well, first it is getting your credit right. The second is the down payment and some secret ways to get access to money that maybe you didn't know about. Your mortgage pre-approval, so important to do at the very beginning. The right realtor, finding your home, making an offer, the escrow period, closing day, and monthly mortgage payment. We're going to walk you all the way from beginning to end through the home buying process, and absolutely starts with getting your credit right. You cannot be first in line for that house that you really want, and you want to have it over everyone else if you don't have your credit right. So that's what you can do right now. Even if you're not looking at houses yet, even if you don't feel like you're quite ready, now you can start getting your credit right. The first question you have to ask is my credit above 742? Most banks have a way to see your credit really, really quickly. Credit is more accessible than it's ever been to find out what your credit score is. So what is that credit score? If it's below 742, then you need to do some work to get that credit score up. It's not the end of the world, but you're not going to get the best financing options, so you need to get that. If it is below 742, you might consider getting your actual credit report. That's a little bit different than your credit score, and it'll show you exactly what things are affecting your credit score. So if there are mistakes, if there are issues, you can go in and fix those and bring up your credit really quickly. Or if they're not mistakes, then you can address the things that are going on and make sure you have those going better. And then obviously fix those issues on the credit report. That's how you're going to get your credit right. All right, so you have your credit right. There's one other thing we need to understand before we really get into the process, and that is the down payment. This is the amount of money that comes out of your pocket that the lender won't pay for, right? So if you're going to buy a $300,000 house, you may have, if you had a 5% down payment, that would be $15,000, which is fairly common that you would need to be able to come up with up front. Now, there are ways to get access to federal, state, and local support if you are in a lower income situation. You should check out the federal laws, the state opportunities, and even your local government can have funds that would help you with down payments. Oftentimes you have to take a class or a course or something like that, and then they'll literally grant you money that can help to cover your down payment. So I would definitely check into that. Generally though, it's however you find it, it's at least 5%. So at whatever price point you're thinking about buying, you want to start saving up about 5% of that money to be able to be in the position to make that down payment. And don't forget closing costs. This is an additional cost on top of the down payment that you'll experience. And I'll talk about that when we get to closing, but you want to make sure that you have probably an extra 2% or so above that 5%, getting to about 7% to really make sure that you have everything that you need at closing. Okay, so we're ready with our down payment. We've got our credit in good shape. So the next thing to do is not yet go look at houses. We need to get a mortgage pre-approval. Any good realtor is going to want to see your mortgage pre-approval before they start showing you houses. And that's simple. If you can't make an offer, they don't want to spend their time. And if you don't have a mortgage pre-approval, you really can't make an offer because you can't prove that you have access to the money, right? So you've got to go and find a reputable lender. And here's a couple pieces of advice. One, you want to ask other people around you who have used lenders before. Do not use a random lender with an 800 number or someone who sent you a text that you don't know anything about. Who is a reputable lender? I would definitely check in on credit unions. Local credit unions oftentimes have really great rates and access to loans that maybe other type of lenders wouldn't. You just want to make sure that you have a reputable lender. That's one of the most important thing. Complete before looking at houses. You have to have that pre-approval from the very beginning and understand what you can afford. It is not your lender's responsibility, although your lender will pay a lot of attention to whether you can afford it or not. But they're probably going to be willing to lend you maybe even a little bit more than you can afford. A good lender won't take that too far, but you really want to understand what you can afford and make sure that you understand that. One other thing, you want to make sure you have a fixed rate mortgage, not an adjustable rate mortgage. Super important. A fixed rate mortgage, not adjustable rate mortgages. There's some predatory lenders out there that'll make something look really good, but it has an adjustable rate, which means it'll change in a few years to a much higher rate, and you certainly don't want that. Okay, so now you're pre-approved. You got your down payment figured out. You got your credit figured out. You're pre-approved for a mortgage. It is now time to go and connect with the right realtor. And the right realtor is very similar to the right lender, right? You want to find someone who's reputable. If you've already found a lender, ask that lender who are reputable realtors. That's great. If you already knew a realtor ahead, that's also a great way to find a great lender. And other service providers as well, insurance, things like that. Talk to someone who you trust in the mix and get recommendations from them. It is absolutely the best way to find the best providers. Make sure you and your realtor are on the same page. Make sure they understand who you are as a person, as a family, whatever your life dynamic is, what types of property you're looking for. Have your list of top 10 things you want, because every single house is going to have some of those things missing. There's no perfect house, and there's no perfect house, so you really want to have your checklist, but then you have to be willing to let some of those things go and figure that out. And don't worry about the cost of the realtor. And here's why I say that. Most realtors are paid for by the seller at closing. So the seller pays for the cost of both their own realtor and the buyer's realtor. That means that the cost of the realtor is really not on you. So going without a realtor, there's really no reason to do that. That's an advisor, someone who can walk you through the process. And in the end, you really don't have to pay for that anyway. So don't worry about the cost of the right realtor. Okay, so now we're ready to go find our home. We've got our realtor. One piece of advice I have is don't go looking outside of your price range, and don't let a realtor take you to a house that's going to be at a slightly higher price range to start, and then kind of take you to the price range you're in. That's something that realtors can sometimes do to make you notice kind of what you're missing by being at the price range you're at, hoping that you'll go up. And I just don't think that's the right way to do it, right? You want to look at houses in your price range from the very start so that you don't get eyes on something that has all these extras and then everything else looks less good, than what you can actually afford, right? That doesn't make any sense. Know that you won't get everything. This is what I was saying before. You have to have your top 10. What do you want? Do you want it in the city or in the country? Do you want a certain amount of square footage? Do you want a basement? Do you want to have a fireplace? Do you want to have a wood stove? Do you want to have, what are the things that are important to you? Make that list and be clear with your realtor about what they are, but be willing to let go of some of those things. Nothing is perfect, but do not ignore red flags. If you walk into a basement and there's things that look like they're crumbling, you are out of there. Unless you're someone who knows how to fix basements, maybe that's a different story. But in most scenarios, if you see a red flag on the surface, there's much more underneath it. And that's what inspections are for, which I'll talk about in a second. But if you see red flags right from the start, even if the house is beautiful, even if you're thinking it's got checks off so many of the things, if there are major issues, especially if a house is older, there's so much money that you could potentially have to put into just getting that house to fully livable condition. If you're looking at it in the summer, what about the winter? How well is it going to hold the heat? That could be a huge extra expense that you never thought of, until you get to the winter and suddenly it's not holding heat and you're paying tons of money for your electricity bills. Obviously, you're not going to necessarily see that, but if you see old windows, that's probably a good sign that you're going to have some issues there. Okay, what about making an offer? So this is the fun part. You found the house you want. You're really into it. At that at that moment, you're ready to give away anything. And I guess one piece of advice is just, you're still making a business transaction here, and don't forget that. Be really smart with what's called contingencies. These are the extra things besides the price of the house, right? You say, I'm willing to buy the house for X number. Everybody understands that, right? The contingencies are things like, if someone wants to stay in the house for an extra 6 weeks and you're okay with that, could you let them do that but not charge them? Lots of people charge people in that situation. What if you don't charge them? Suddenly your offer looks a lot better and you really didn't give anything away, right? What about some of the things that you are, what are you willing to let go? The only thing I would say is don't let go of the inspection, right? Also, consider something called an escalation clause. This is a great way to go to the highest point in your offer. So let's say you think that you would be willing to give $400,000 for a house, right? but you think you might be able to get it at 375. Well, you can make an offer at 375 with an escalation clause that says if anyone else offers more than 375, our offer automatically goes to $1,000 more than their offer, or however you structure it. It's just a way to make your offer more likely to be the winner, as long as it's not going higher than what your budget is and what you're comfortable with. So talk to your realtor about a potential escalation clause. And no matter what you're willing to do with contingencies, do not waive the inspection. The inspection is absolutely the most important point for two reasons. One, it's obviously going to show you any major red flags that maybe you didn't see on your walkthrough. That's key. But two, it's another point of negotiation and your capacity to potentially negotiate with the seller after the inspection. If you waive that opportunity, then you lose the opportunity to see some things in the next couple of weeks before the inspection, see some things in the inspection, and then ultimately go through some more negotiation with the seller. So let's talk about this. The escrow period is a period of time from when an offer is accepted until the deal closes. So you made your offer, you went back and forth with the seller, you offered a number, they came back with a higher number, you came back in the middle, maybe there were some contingencies that got changed, elements that got, updated or whatever. Finally, they accepted your offer, and now we are in the escrow period. So what happens in the escrow period? Well, a couple of things need to be navigated. Lots of things happen in the escrow period, many of them behind the scenes happening with the title company. They're checking to make sure the deed is clear, which means that the person who's selling you the property actually owns the property free and clear and can sell it to you. There aren't any other issues with the property. So those things are happening in the background. But the biggest things that you're going to see on the surface are these. The first is the inspection, right? This is when a professional comes in and goes through the house and creates a large document that says all the things that are concerns about the house. Now, if you're buying an older house, this is going to be a huge document and look very scary, but you're really looking for things that are major issues. Every house has some issues. And if an inspector comes back to you and says, nope, nothing wrong, I've never seen that, but if they did that, that would be a red flag in and of itself. So the inspection is one piece of the escrow period. The next is insurance. We obviously need to get your insurance set up and prepared. Your homeowner's insurance generally is going to be paid through your monthly mortgage payment. I'll talk about that in a sec, but you need to get it set up, right? So you need to talk to your insurance advisor and have them start to get the insurance piece ready for you. And then finally, at the very end, usually of the escrow period, there's something called an appraisal. This is generally done by the mortgage company, although usually you pay for it. But they're going to send someone out and say, hey, is the house actually worth what we're lending on the property? So let's say you bought a house for $250,000. That was the accepted offer on the house. An appraiser could come out, and if the appraiser says, well, I think it's only worth $230,000. Now there's a $20,000 difference between what an appraiser said it's worth and what the winning offer was. If the lender feels that that difference is too much, they could not want to give a loan. Usually, as long as the amount you're borrowing is the same or less than what the appraisal amount is. So in that example, you offered $250,000. It only appraised for $230,000. Well, if you put $20,000 in the down payment and you're only borrowing $230,000, then that probably would work out with the lender. But if you only put $10,000 as the down payment and you're borrowing $240,000, now you've got a problem because the appraisal says it's only worth $230,000, and they're going to loan you $240,000. Oftentimes the bank will say, well, you have to come up with the difference of $10,000. And that always happens late in the process, and so that can be a little bit scary. But it's just important to know that that's a part of the process, and it's important to make sure that while you're going through it, your realtor really feels that that appraisal is going to be fine, that the offer that you made for the house is in line with what the house is actually worth. All right, closing day. So you're finally to the closing day. And usually when you do a closing, you meet at the title company or virtually at the title company. And a title company is responsible for the transfer of deed or title from one individual or one seller to a buyer, right? They do all the paperwork on the inside. They make sure all the money is properly exchanged. The money actually comes through the title company and then gets sent out, wired to all the different people. So the lender is sending the money to the title company is paying the money to the seller. All the different fees are all in the mix there. All the costs for the realtors are all in there. The title company really is responsible for the transaction happening. And that's why we oftentimes have the closing at the title company, because they're doing all the work to make that happen. Fees that are included are important to understand, and your realtor can help you with this through the process to make sure you know what amount of money you have to bring to the closing table. Oftentimes you walk in the room with a check or money order for the amount of money you were supposed to bring. And that can include the down payment. That can include fees for things like appraisals and inspections, for the title work, oftentimes, for any other kinds of closing costs. The realtor's fees, although again, that usually comes off of the seller's side of a closing sheet, but you need to understand what those closings are and what those fees are, and hopefully your realtor can help you with that. And then finally, your escrow account contribution. It's important to understand here, and I know they're the same word, right? There was an escrow period. Well, now I'm going to use the same term for something slightly different. It's called an escrow account, and this is an account that your mortgage company keeps for monies that they collect but are not for paying down the mortgage. This is usually two things. This is homeowners insurance and taxes, property taxes. And so at closing, they usually are going to collect 1 year of homeowners insurance premium and 1 year of taxes, so that then they put that in a little bank account that's connected to your mortgage. So you should expect all those things at closing day. All right, really exciting. You have your keys now. You're moving into your house. Everything is happening. You've done it. You've made it through the process. There's only one last thing to talk about, and that is your monthly mortgage payment. Of course, at some point you'll start making the payments on the loan that you have going. And it's important to understand how a monthly mortgage payment works. There are three parts of your monthly mortgage payment. That is principal, interest, and that escrow account contribution. So let's say your monthly mortgage payment is $1,000. At the beginning of your loan, a heavy part of that is interest. That's money that you're paying to the lender for simply lending you money. So let's say that $500 of that $1,000 is paying interest. And then the secondary thing is principal. This is actually paying down the amount you owe on your mortgage. So that could be $400 at the very beginning, right? So of the $1,000 you're paying in your mortgage payment, you're paying $500 in interest, $400 in principal, and then there's a little amount that you're paying every single month to that escrow account. This is essentially money for your homeowner's insurance and your property taxes, and they're collecting a little bit of that every single month. And then when the property tax bill comes, they pay it from that account. When the homeowner's insurance bill comes, they pay it from that account. So those are the three things that are being paid by your monthly mortgage payment. All right. So what did we cover? Well, you got to get your credit right. You can do that right now. You can start working on that. Down payment, you can start saving up for that as well. Definitely check out the opportunities for grants if you are in a lower income situation. Once you're ready to really start getting the ball rolling, you want to get pre-approved for a mortgage. You want to find the right realtor, especially in this environment with the way that interest rates on mortgage are going and the way that properties are changing value. In 2023, your realtor and your lender are going to be more important than they've ever been in the past. So you really want to have those two pieces right. Finding your home, making sure that you're able to go out there and get what you want, making an offer, making sure that you're considering contingencies, maybe considering an escalation clause, and getting all those things in place. Once you have the accepted offer, the escrow period is where everything kind of gets worked out. Usually it's about a month or 2 months, somewhere in that time. Closing day, we actually exchange the property from the seller to the buyer. You own a house, and eventually you're going to have to start paying the monthly mortgage payment. Obviously makes sense that we would have to do that. All right, well, that is the home buying process. I am looking forward to hearing from you all in the comment section about the houses that you're considering thinking about some of the things you learned in this video that maybe you didn't realize before, and what some of your worries or concerns are with buying a house in 2023. It really is a different environment than it has been in the past few years, but there are still the right houses out there. There's still there times when buying a house is right for you, and I know that you're going to find the right house. All right, until the next time, have a wonderful day.